Hello everybody and welcome to video 2 of the Infinity Academy. We are currently logged in on the Infinity tool, and if you have not seen the first video, I would really recommend you to go to the first video where you can see how to find the Infinity tool and what the different trend lines mean. Now in this video I want to show you one of the trading strategies that I use most, which means that I'm trading with the 15-minute pivots and the infinity lines, where the major trend is confirming our trend on the 1 hour, the next time frame. We have a 15-minute line for the current minor trend, and the entry line to know where we are going to buy in this case, because in the first video we saw a red under the cloud sell. Here we see green, and if this would be above the cloud, buy. Now this is a great example where we still have a lot of space to cover with the pivots. So I want to talk a little bit more about what the options are and how far and how I would construct my trades in this buying period. First, I want to scroll a little bit back, where we see here that the market has been going up and down for a few weeks, but we also have a great example here where the Infinity tool is giving us a lot of different buy signals in a row. So when the market is really trending, you see that the major trend is basically green or red, but in this case it's an uptrend, where we also see the minor trend is up, and there's a lot of little pullbacks giving us multiple entry times. The first entry we see here is when it's green and the price spikes out of the cloud. In one day we are able to make a very serious move of 60 pips. The next day the market starts with a pullback, and after that green comes out of the cloud, and it spikes out of the cloud pretty quickly. I call that, when the price is under the cloud first, is that it's kind of a driving car that gets up to speed, and then when it comes out of the cloud, boom, it directly creates that nice volume for us. And especially with a pending order waiting on the other side of the cloud, you can really catch a nice ride there. Here another one early in the morning, green coming out of the cloud as well. We have a buy, and then the price goes into a pullback. We get a little buy here because the trend changes back up. The minor line is green, the major line is green, and the entry line becomes green for a second while the price is just above the cloud, so we get another buy. And let's say you wanted to buy to this level or this level, but the price goes into a pullback. Now you see a beautiful resistance here on the minor trend line before taking off again and turning into break even less than 24 hours later, and even turning into profit, and a very nice profit if you want to ride it out for the rest of the week. This was a Friday, there's the spike, but this would be a very nice trade still. Of course, we would like to avoid drawdown, so when prices come from under the cloud and they already have some speed, these are of course really nice rides. This is a ride that you can take early in the morning, but also a little bit later still, and it's a 70 pips up. Then we have a drop again, and the price comes here pretty steep out of the cloud for a very quick buy. That is great. And later you see a few other moments where the buy arrows are coming green above the cloud, but first a pullback and then profitable. This one directly profitable. That is very good. Here we see green. After this pullback the entry line becomes green, and we have another buy. And here you see that the only thing what is the most important to do in this whole situation is not to sell. Don't try to take the little pullbacks. Don't try to take the bigger pullbacks here, even when you see the price comes under the cloud, because you never know how deep they go, and it's just risky to trade against the trend. This tool is specifically made to help you to find the trends and to ride the trends in a safe way. anything that you can do here is if you buy at any point, it will be profitable for you over the time period of about 12 May to 21 May. That is just a very good example. Now, I'm going to look to the current situation where we just have the last Thursday and the last Friday creating a pretty strong uptrend. Now, the major trend already switched here on 11th of June, so technically we are in an uptrend from here. Now you see here there were multiple moments that the price really came down, but at the end the price ended up always higher than anything you bought from 11th of June in the afternoon. So that is good. That is the proof that the price at the end will always move up. Now looking to what I can do right now on this pair is that it's currently in the cloud. So I wouldn't like to buy it as a market execution. Sometimes when the price is above the cloud, let's say you are here, you see the pullback and you want to go and jump in straight away, then that would be my first entry from S0 to S2. I'm always measuring the distance of my trade, and this is 28 pips. It is very good and possible to do this in 2 times. So if you want to take the first 15 pips and then another 15 pips, you can do this with take profit 1 and then take profit 2. So you take 15 pips first and 30 pips second. That can be very helpful. If you do half of your lot size to the first level, then move your stop loss to break even to go to the second level. After reaching S2, you can expect a certain pullback. S2 is a strong support line, and in this case it's more a resistance line, but they call them support 1, 2, 3. It's like 0, 1, 2, 3, and then it's pivot, and then resistance 5, 6, 7, 8. So technically this is called support level 2, but of course it's a resistance right here. It breaks and it comes down, and it's now resting on S2 just before the weekend. Now, what I would really like to do is I wouldn't like to buy this market execution as the price is currently in the cloud. So I would like to buy this from S2 with a pending order, and I would go 15 pips, take profit 1, and 30 pips, take profit 2. Exactly the same as we did here before. Now after it enters pivot 4, there's a chance of a small pullback, at least to S3 like happened here before. What you can do at that moment is just wait for the price to come again to you and take the next trade from pivot 4, 15 pips to R5 and 15 pips to R6. From there you can expect another heavy resistance for 1 or maybe even 2 levels, and if it even would go here, the nice part is you can wait and you can go again the same trade one more time. This is something that we see a lot in the market, being able to take the trade multiple times. The nice part of that is that if you look from here to here, a swing trader would only make 90 pips, while we can make 30, 60, 90, and after the pullback another 30. And then even continuing, let's say it would be a straight continuation, maybe the market goes flat for a while, or it even takes a little pullback, and then we can go another 15 to 30. Now when I see that the pivot levels between one pivot level, the distance is less than 10, I would take a jump of 2 at the same time. So I would like to take red to blue, blue to red, here's again blue to red, and red to blue. So if it's less than 10 pips per pivot point, I would take it in one ride of 2 pivot levels. Otherwise I would take it every time step by step. That is basically how I trade the Infinity tool on top of pivots, and I really hope this helps you. We are trading this style every morning at 6:30 a.m. UK time, 1:30 a.m. Eastern Standard Time on the Go Live platform. So you will see me taking a lot of market executions when possible, or pending orders with the strategy on the 15 minutes with the 1 hour trend confirmation. And that's the style I like the most. Trades are hitting take profit pretty fast, sometimes even during the session, otherwise within the same or the next day. And I'm going to show you guys in a few other videos how you can take some more long-term trades with a higher pip count, but you also will need to wait for it a little bit more. So stay tuned, and I hope to see you guys on the next video where we are going to look into the higher time frames.